Hey everybody, this is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. Well, happy Monday, everybody. I just got back from the gym, did an hour on the stairs, a little more intense today, so that was beautiful. So good. I'm also working on another song on the piano. It is coming along really awesome. Can't wait to play it. I'll share it with you guys when I get a chance. But anyway, let's dig into this wild market. Everybody knows that I've been waiting for a pullback of some kind. And you know what? I think we're here. We are at the beginning of this. So let's talk about it. Where are we? What are we doing? How are we working out? So for a long time, we have been putting in higher highs. These higher highs have been decreasing in intensity. We had a $4,000 move, we had a $2,000 move, and we had a $1,000 move. So our moves are getting chopped in half. You can see it a little easier on the weekly. So if I go to weekly, you can see that we were about 22% of upside here this week. Then we were down 9%, or up 9%, and then up 4.5%. So we've been decreasing, and we've been pulling up into the death cross, just as we talked about last week. We're pulling up in the death cross, getting ready to reject. And the rejection is not life-threatening, in my opinion. I think it is just the fact that when we have crosses, we pull into them. And we are pulling into the weekly cross, the death cross. And this is playing out. But we also have a golden cross on the daily down here. It crosses just under 2,000. So we will likely pull down into this cross here, which means a test of 20,000. Excuse me, I said 2,000 but meant 20,000. A test of 20,000 is coming. So this is the beginning of a pullback of some kind. I am so happy to see this because this is the kind of structure that will give Bitcoin way more support, way better highs, much more measured moves to the upside. So I am absolutely happy to see this. We could pull back to anything. We could pull back to the 21.6 line. That would be fine. We could pull back to 21.2. But really, I'd love to touch the 200. The 200-day moving average would be just golden. It would be so great if we could touch that. So this pullback is in the works. And we're going to talk about our good friend, the Wyckoff Distribution. So we talked about a Wyckoff accumulation back here, and it was picture perfect. We had our markdown, we have our trading range, we had a little bit of a show of strength, and then we wimped out, tested outside of our trading range. We had a spring here or a spring here, one of these two, and then we started building. We were moving up out of our range. We were just about ready to do the full markup, and the FTX Black Swan just wiped us out. So all of this was invalidated temporarily. And then we kind of rebuilt some structure. We let our averages come down and we started moving. Well, this Wyckoff is seen more visibly on the shorter time frame. First of all, let me explain what a Wyckoff distribution looks like. So I'm going to go to the 4-hour. I'm going to zoom in a little bit so you can kind of see some of this price action. And I will move the chart over. And this is so textbook. It is move for move. Unbelievable. Here is the move. Phase A, we move up to a buying climax. We have an automatic reaction. We have a show, excuse me, I forget the ST. I've got this all written down, but we have kind of our move up. We have our automatic reaction, creates our trading range. We have a couple of show of weakness attempts. We had a couple down here to kind of throw us off the game. We were about to move outside of our trading range, but we didn't. We kept all of our bodies inside the trading range. And then we had an upthrust here. We had an upthrust here. And then we have upthrust after distribution. And then we're moving into the last point of supply, which is right in here. And as you can see, we are changing from green to yellow in this candle. In 12 minutes, we may, on Bitcoin, after a move out of the red zone at 16,600, we may be exiting the green zone in 12 minutes. This will be a giant move for Bitcoin. We will definitely see some downside very soon. So I've got all these things labeled. Look at this. I'm going to go over to our, this is our, I've put this on Binance so that you can kind of see it. Okay, this is our, these are our pieces. So let me grab the, here we go. Look at this. This is picture perfect. We've moved up. Here's our buying climax right here, this BC, down to automatic reaction. We had this kind of immediate fallback, and this is kind of this automatic reaction. I don't know how everything moved, but it did. Our automatic reaction is down here. These little wicks down here are show of weakness. So our automatic reaction creates our trading range. So this is our upper bound, this is our lower bound, and we are ranging in between these. So that creates our trading range right here, these lines here. And then we try to throw off our trading range a little bit. We move outside. We have these show of weakness to kind of throw people off, to freak people out about, oh, hey, we're dropping out. And then we have these upthrusts. This is the secondary test, so it's not as high as the buying climax. So we have a secondary test here, so that's here. And then we pull back, have a show of weakness. You see how this is all playing out? I mean, it is picture perfect. Buying climax on top. This is our automatic reaction down to here. We move back up into a secondary test. Then we have show of weakness, a couple of wicks outside of our trading range. Then we move straight up into an upthrust outside of our trading range, but right back in. So we're back into our trading range for quite a while. And we slowly build up into a move that's a final upthrust after distribution. And that happened right here. This was a move that I heard a lot of people getting excited. Oh, here we go, breakout again. But it was weaker than all of our other moves. We're losing strength every time. And when we finally have a breakout that fails and drops back into our trading range, we know that the Wyckoff is absolutely in play. This is kind of our, if it was an accumulation, this would be a spring. It would be on the bottom, it would be a spring. This one is our up thrust after distribution. So we have this move outside of range and then back into range. And this is the last point of supply. That means whales are selling to whoever's buying before everyone sees what's happening and everything moves out. So prices are about to move. So we're going to have another show of weakness below this trading range. And the second we get a candle body close below this range, things are going to be marked down. So our markdown is happening next. So this is exactly where we're headed. Where is the markdown? The markdown is at the most reasonable point of, so there will be one mark down to here. So around 21,000 is very, very, very likely. And if there's even more weakness than expected in this market, we could drop down to our 200-week moving average. Or excuse me, this is the 200-day moving average, and this is the 50-day. So these are the two lines that will cross and form a daily golden cross. This will all mark down into this cross. Will we touch the 200? I'm not sure. But if it was absolute classic textbook, we would touch the 200 and then we would move back up again. So this is unbelievable. It is absolutely picture perfect. It is it's absolutely what is happening right here. I've been watching these unbelievable moves. Whales have moved this, and feeding on the frenzy of retail. It's funny that retail was so slow to get on board. It was, if you look at the, it's funny. It's fun to use the what's that indicator? The fear and greed index to kind of see what the general population is feeling. And even though we've had, let's see, how many days was this? This was from the exit of the red and yellow zone. We have gone 26 days. If we just started yesterday, from yesterday, we had 25 days of straight up. And nobody, the 50% mark is the difference between fear or greed. And we did not hit greed until yesterday. Isn't that amazing? We went up for 25 straight days, and it took us all the way to the top of this before the sheep of the news and the slow moving retail to get on board after a 42% move. And now you've got a lot of people buying up in these ranges when it was way overextended. This is unbelievable. I really can't believe that we even made it this far. It should have been way more gradual, but never underestimate the impact of a bunch of very bullish people trying to hop on board and not miss the boat. So we're going to get ourselves a pretty sweet distribution. We're going to have a distribution. It's going to mark us down, and right in here somewhere is going to be the sweetest long buying opportunity of this, probably of the next 3 years. Like, this is the moment I've been waiting for. This is going to be an absolutely beautiful, safe, long-term entry, in my opinion. So it's looking spectacular. So if we close this candle below 23, let's see, where's the open? 23,026. So I'd say 23,000. If we close anywhere below 23,000, this is a bearish engulfing at the top of a ridiculous run, and we will absolutely see a markdown. I'm expecting at least, now some of these things, markets move down faster than they go up. I'm betting we climax out of this within the next 7 days. So it's probably this week. If some insane news comes out, this week, or, something happens, anything can happen, then this could be extended. But we are looking at a pretty decent markdown pretty quick. I was expecting it to happen many times. I thought it was going to happen here. I thought it was going to happen when we dropped below the 20 on the 4-hour back here. There were a couple of good points where it could have easily turned around. I mean, this could have classified as our up thrust after distribution, and we were back in the range, and we could have popped right out here. So it was really, really hard to read, but we managed to get all of our touch points, including a solid move out and then back in. So definitely we're getting our chance. So all those that have been patient along with me, waiting for a good entry point, it is on the table. So looking good. I had to share one little tidbit of good news. I just barely had the chance to exit Woo. There's a coin that we've been trading. Woo. We picked this up quite a long time ago, and it was 20x leverage, so it was an 811% gain, which was pretty darn sweet. We have a couple that will be exiting over the next few days. So somebody was asking me, why don't you close out on a lot of your alts if you're so bearish? And we're absolutely going to be doing that. You can see how Woo has, we entered it down in here. We started struggling and showing some pretty good weakness. And just today, right around here, I exited that trade, and then we'll let it regroup and find a place, and then we'll find a nice entry point. But 811% gain is pretty delicious. So that was a fun one. And I'm working on exiting SRM. This one it has just cooled off too long. This is normally a bull flag, but a bull flag, in my mind, these things have kind of an expiration date on them. And with the market the way it is, this has kind of bled a little bit too much. It was an amazing trade. I'll finish closing it out probably by tomorrow, and I'll show you guys what it looks like. But really, really pretty. Things are definitely, they're progressing. We're reading these charts one candle at a time and trying to stay one step ahead of the game. But it's fun to make money. It's also a lot of work. There's a lot of patience. I've been in a trade upside down for like 14 days, and it's not overreacting. It's being patient and waiting for the market to do what it'll do. You just have to be patient to let it do it. And so that's what it's all about. But really, really cool. Over the next few days, we should see some pretty interesting discussions out there in the world. I'm definitely expecting us to find support down in here, but there are probably some doomers out there that are so excited about this move down. When we get a decent move down, everyone's going to start pointing out this death cross on the weekly and how we'll never recover from it, and that this time is so different and Bitcoin's toast again. There's going to be a lot of overreactions that are going to happen out there. But news and all of that is all misdirection. You have to read the chart, not the news. And so that's exactly what we're doing. Pretty cool. We'll see how this plays out. There's plenty of time for this to move, but I'm really looking forward to having a nice entry point for Bitcoin and Ethereum coming up in the next couple of weeks here. I'm betting this week, but I'll be patient and see. I'll let everything kind of cool off. But all right, thanks for being here. It's fun to have you guys watch me. There's about 100 people that watch these videos, and it's pretty cool that you guys have been loyal and interested in the things I have to say. So I take that as a compliment. All right, you guys, we will catch you on the next one. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.